Hello. Hello again, and welcome to another edition of Mastermind Minutes. My name is Gary Occhiogrosso. I am the founder and managing partner of Franchise Growth Solutions and the publisher of FranchiseMoneymaker.com. For those of you new to the broadcast, Mastermind Minutes is a concept where we have one expert, we ask one question, and we get one answer. We usually do it in minutes, never in hours. And then, of course, if you'd like more information about the guest or about our topic, you can contact the guest directly, and they're more than happy to fill in some of the blanks that may have been created in this short podcast. Our guest today is Beegees Hebert, who is the Senior Account Manager with Guidant Financial. And Beegees came to Guidant in 2011. And since then, she's become a small business financing aficionado. And I love that word. As an account manager, she's committed to helping individuals identify and deploy the financial and financing solutions that will help them reach their short and long-term goals, making the process of funding as smooth as possible. And I can tell you, funding a new business sometimes is a little bit nerve-wracking. Well, it's more than a little bit nerve-wracking. It could be big-time nerve-wracking, but Beegees is here to explain how we smooth that over. She also has firsthand knowledge of what it takes to run a small business or a franchise, because prior to joining Guidance, she served as the general manager for a chain of tanning salon franchises, which is important. She understands the franchise business. And before that, she was the sales and marketing director for an independent health and fitness business. Today, she uses all that experience to relate to clients and provide firsthand advice in helping them finance and fund their businesses, franchise or otherwise. So, Beegees, thank you so much for being with us today. I truly appreciate you being here. I know that's a short intro. Maybe you want to tell us a little bit more about yourself. Tell us a little bit more about Guidant Financial, and then we'll get to our question.
Absolutely. Thank you so much, Gary. And hello, everyone. As Gary said, my name is Beegees with Guidant. And our company really specializes in a variety of different funding options, which will range from leveraging assets, small business administration loans, as well as even investing your own retirement into your own business. So we really do pride ourselves in taking a more of an educational approach with our candidates, and also maintaining that long-term boutique-like relationship with both with lenders as well as our partnerships, such as Gary. So we're a fairly large company, up to about 150 different employees in 5 different departments. So not only do we offer a variety of options, we make sure that we provide additional services such as record keeping, account management, and so forth within our service base.
Mm-hmm. And this is, and thank you for that. Because sometimes the world of financing and funding, for me, not so much now, but in the beginning, it was like how I feel about insurance now. My eyes glaze over when people start talking about it, but it's very necessary for someone in like what my company does is develop franchise companies, and we develop or sell, if you will, franchises on behalf of our clients who are the franchisors. So on our end, if our salespeople expect to be able to bring someone into a franchise company, part of that journey, part of that process is being able to help the prospect, for the lack of a better word, or the potential franchisee, actually secure funding for that business. As an example, if we're selling a restaurant concept and it costs, let's say, $600,000 to turn the key with fees and build out and equipment and everything else, turn the key, open the door for business, $600,000. We probably require that somebody have somewhere in the neighborhood about 20-25% of that money as liquid capital, unencumbered, not borrowed. So you would say, all right, so someone comes to the table with 150,000 in cash, 180 somewhere in there. Where do they get the rest of the money? Well, that's when we make the introduction to Beegees, who then works with that potential franchisee in order to secure the funding. So I guess, just quickly on the franchisor side, they obviously have to have a relationship with Beegees and a company like Guidant. Otherwise, they won't be able to get their potential franchisees or even existing franchisees that want to expand financing. So with that as the backdrop on how me as a user actually uses a company like Guidant and why it's important. I guess our question today really is, and we have sort of two roads here. We have the franchisor and we have the franchisee, and you can start wherever you want. But what would you say are the key tips, the key things that a franchisee and then a franchisor would need to sort of have in order, have their house in order, or what are they going to need to know in order to work with a company like Guidant and be successful in funding a new business?
Well, I love that you brought up the importance of having cash to contribute to their project. Cash is king, and it's not only needed to put down on most loans, but it's also expected to be the post-closing liquidity. Banks want to make sure that there's money left over to start making those loan payments. One question that I encourage franchisors to feel comfortable asking their candidates early on in the process is, what kind of liquid assets do they have? Do they have stocks, mutual funds, or retirement? Also, what kind of incoming cash? What's their income? Because that is very important to most banks. They want to make sure that, that the candidate, whether they're purchasing an existing franchise or starting up a new one, has the means to service that debt payment.
Yep. I agree. I think, there's also, this philosophical element that I always, when we work with either franchisors or franchisees, especially if we have a candidate, we'll go through what we believe are sort of the guidelines that you just outlined, but not being the lender, we don't get too detailed on it because things change all the time. But we also remind them that, well, we remind them of two things. Number one, there's only so much of the project you can leverage because the debt service needs to make sense. If you're not, if you're only working for the bank and the landlord, there's nothing in it for you. You have to service debt. And what should that ratio be? That's the first piece. And then the other piece is, and again, this is more philosophical to me, it's what I call skin in the game. How does anyone in their right mind expect a bank to give someone 100% of the money to start a business when they're not even willing or able, but in many cases willing, to put their own skin in the game? It doesn't inspire confidence to the lenders. So talk to us a little bit about when you say a cash, I think you said, cash, or we say cash injection. What sort of numbers, if what sort of percentage, how would that work? What would most potential franchisees need to have in terms of a percentage of the overall project cost?
Yeah, so if you're creating a new business, typically they're going to require about a 30% down payment. Whereas if you're acquiring an existing business or franchise, you can expect that to be about a 20% down payment, given that the existing business in that case is profitable. As I mentioned earlier, in addition to the down payment, banks will be looking at what kind of post-closing liquidity you have, or also known as cash reserves. And that starts at about $25,000 on loans ranging, from $100,000 to $150,000. Otherwise, about 10% of the total project cost is what you can expect.
That's the money, that's the reserve capital that, and we as franchisors, I mean, we build that into our FDDs, our franchise disclosure documents, where we show how much reserve capital as an estimate we believe the candidate should have when they go into the business. Now, you mentioned something just there. You said, the candidate should have X percentage, but what are some of the other things that the lender would take into consideration? So if and I'll give you an example. Let's say I've been working, I've been working in an office for the last 30 years, and now I want to open a restaurant, and I have absolutely no restaurant experience. Does that impact how much money I might need to put down, or the bank's position? And I guess the B part of that question is, does it support me a little bit more that it might be a franchise than some independent kind of business? So how do banks view my prior experience as overall risk, if any?
Sure. Well, that's one of the beauties in franchising, is that banks will make exceptions for an individual that doesn't have, for instance, any restaurant related experience, maybe comes from a corporate America background. But it helps. It definitely helps. So direct industry experience can be a significant factor for some lenders. Now, that doesn't mean that if you're, say a personal trainer, you're a perfect fit to run or own your own gym. So banks will look at overall experience. Have you had a management position? Have you worked with money? Have you managed individuals? What do you have any kind of accounting background or education? So there are ways to make up for no direct industry related experience, but people tend to also be drawn to things that, industries that they are familiar with.
Mm-hmm. Okay. So before we switch gears here, I just want to maybe draw some sort of connection here. So, and I'm going to use your name, Guidant. Okay. So it sounds like what you do, and maybe you could explain a little bit more about the Guidant process, because it sounds like there's a lot of icebergs to navigate, and you guide, hence the name Guidant, you guide the candidate through that to get them to the funding, because it sounds like there's a million moving parts. What's the service, so to speak, or the advice or the counsel that you give the candidate to help them navigate through this entire process?
Well, so there's pretty much 5 categories, even though it can seem like there's more. And what we refer to that as the 5 C's of lending.
Love it.
Yeah. First being that capital, that liquid cash that you can put not only towards the loan, but also have leftover for the aftermath. Then there's credit. That's also something that, I'd say aside from cash can be, the number 2 deal killer. So now the SBA technically only requires about a 640 credit score, but in all reality, what you're going to see lenders wanting individuals to have is at least a 690 or better credit score. That typically means that your debt to income isn't maxed out, that you make your payments on time, that you're reliable and responsible. So 690 and up, that's where most lenders are looking. And then there's capacity. So also, for instance, if you're purchasing an existing business, like you mentioned earlier, can this business afford a new owner with a new debt service? And then for startup businesses, well, what's the borrower's income? Can they afford to live their life as they are, plus having this loan payment now? So it's all a calculation, really. Then there's the character, which we just touched on. Is this the right type of person for this type of business? Are they responsible, once again, and are they responsive? Banks will turn deals down because the borrower doesn't pick up when they call, or the borrower, doesn't present themselves to their best.
Mm-hmm.
And then, of course, my favorite, which always, and I'm joking when I say that catches a lot of people off guard, is collateral. The expectations the SBA has with personal assets is that is contributed to the loan. Now, the SBA or lenders in general won't necessarily decline a candidate if they don't have collateral, but they will expect that collateral to be tied to the loan if they do.
Mm-hmm. Okay. And that's beautiful. I love it. The 5 C's. That's terrific. So now, and I get that, and thank you for that, because again, a lot of folks just don't really understand the process or what's necessary, and hopefully you've cleared a lot of that up for our audience. And as we usually do, we'll give you Beegees' contact information later on, and you can contact her directly, and if you need more info on working with Guidant. So now let's like switch over to the franchisor side. So as a franchisor, what is it, if anything, that I would need to have my franchise company, so to speak, in order, or where should I be as a franchisor in order to have the bank feel comfortable when they review my FDD, or to get registered with the SBA registry? What what do I do as a franchisor to get ready so that if I have a qualified candidate who the bank would accept, now all of a sudden I'm the problem. So how does the franchisor prevent itself from being the problem or the blockage in getting a loan? What can you tell us about that?
Well, like you mentioned, getting your ducks in a row, and that's making sure that you are on the franchise registry. That's the first place lenders will look. The next place is the franchise default percentage, primarily for SBA loans. So
Mhm.
it's even more important that as a franchisor that you're there for your franchisees that have been in business. Maybe they're tired, maybe they're wanting to try something else. Closing that location doesn't help anybody, which is why resales are very common, which is where the franchisor steps in and says, hey, let me help you find a buyer. One way to help your franchisees put the right price on their business is by coming to Guidant. We offer business valuations as well as business appraisals. That doesn't mean that that's what they, just because that's what their business is worth, that's how much they have to ask for it, but it gives them a starting point. That can be one of the number one reasons why resales tend to take longer is because, the new buyer wants to negotiate a price and the seller doesn't really have much backbone as to why they're asking that particular price.
Right.
So, and I would say also just back to that, keeping closures down, making sure that you're picking the right people
Mhm.
as your new franchisees. So being fairly picky, not necessarily signing everybody up to collect that franchise fee,
Right.
but really make sure that they've either come to Guidant or elsewhere to understand that they can afford more than that, just that franchise fee.
And I love the way you've put that, because what you have just said, when we have franchise buyers, candidates who want to buy a franchise, what you've just outlined that the bank would look at in looking at a franchisor, we tell potential franchisees essentially the same thing. Look at the franchisor, look at the document, look at their item 19, what are their store sales, what are their costs, but also look at item 20, which is the item in the FDD that lists how many stores have opened, how many stores have closed, how many stores have transferred. So it's interesting that where sometimes a franchise buyer might think, well, I hope I get approved by the bank, or maybe I can, cut a corner here or say this or say that. What you've just said is that the buyer of the franchise and the bank actually should be best friends looking at the same thing, because if it's not good enough for the bank, then it may not be good enough for the potential franchisee, because everyone has risk involved. And banks are probably much more adept at evaluating risk than franchise buyers. Quick story. Recently, my wife and I bought a second home, and we didn't need to put a mortgage on it, but we did. And someone said, well, why are you doing that? And I said, well, there's two reasons. First of all, money is dirt cheap right now, so I want to control money at a really low cost. But at the end of the day, I love the digging that the bank is going to do into the property, and they're going to make me jump through hoops, and they're going to find out things about this property that I would never be able to find out. And lo and behold, on a property just prior to the one we bought, they found out all sorts of stuff that you would, cause me to run in the other direction. And I think what I'm hearing you say really should be the same for a franchise buyer. If the bank doesn't feel the franchisor is, up to snuff, so to speak, then why should the buyer?
Exactly.
Yeah,
Yep.
that makes very good sense to me. So store closures are one thing. Most franchisors don't publish profitability of units in their FDD, but do banks sometimes inquire for information outside of the FDD? And since they're not buying a franchise, they certainly can, where they might ask the franchisor, hey, what's the profitability of these units? Does those ever come down to those sorts of conversations?
Banks don't, they don't typically communicate directly with the franchisor. They're
Mhm.
relying more so on the candidate, the potential franchisee, to really sell them on the concept after they've, of course, proven that they're the right borrower. How banks are able to visually see that those sales points is with their business plan, their
Right.
projections. Just because it's a franchise doesn't mean that you don't have to go through all of the necessary steps with an SBA loan, for example.
Right. So a candidate would have to put together a business plan based on information they've gathered from the franchisor. So the more accurate, the more robust the information that's coming from the franchisor, the better the business plan that the franchisee will have to prepare, or the better the ingredients will be. I'm not suggesting franchisee will always make a great business plan, but they would have to present that to the lender, a business plan.
Yeah, it's basically your resume.
Yeah.
At your dream job. And that's even more important reason, excuse me, to have support and not diving into a pool that you don't know how deep or how shallow it is. Lenders don't typically go back and review a second time a deal that they turned away the first time. However, with, for instance, Guidant's involvement in the whole transaction, we look for the exact same thing that the different lenders that we work with do. We know what questions they have. We know what can't be left out. We know how to really maximize and present the very best of these borrowers. So now when we present an individual to phase 2 or 3 banks, that's not an application. So our banks will come back to us and say, you know what, get me more information on this, or I'm a little curious about this. We'll go back to the candidate and we'll restructure that, business plan or resume, so that when they are introduced to the lender and it's a true introduction, everything's pretty much perfect at that point.
Okay. So just to round out the conversation here, and then I'm going to ask you for your last thoughts, but based on what you just said, it would appear to me, or it sounds to me, that if I'm a candidate and I come to you, you're going, because you know what the bank's probably going to want to see. You're going to look at me and you're going to say, okay, we need A, B, and C. We need X, Y, and Z. You're going to sort of package me, for the lack of a better word. And then I'm anticipating that you work with more than one lender. So if I have some, if I have some bumps and bruises in my background, let's say, you're going to know what banks may have more flexibility with my sort of background, or and you're going to match me and you're going to present me to that bank. Do I understand that that's essentially what Guidant is doing?
Exactly. Yeah. So when you work directly with any particular bank, a lot of that, the heavy lifting is on the lender. It's on their SBA team, if you will.
Yeah.
And that can be a really slow process. They have a million other things that they do in a day. So for a first-time borrower, it could be frustrating, working with either multiple people, getting lost in the process, not knowing when and what to submit, always kind of feeling 2, 3, 4, 5 steps behind. While working with a company such as Guidant, we make sure that you're always 2, 3, 4 steps ahead of what the lender is going to be looking for. We remind you where we're at in the process. We help you with, updating the franchisor, for example, on timing, when to start looking for real estate, when it's okay to pay that franchise fee. And so we answer the questions before they come up, because the majority of our clients are first-time borrowers, small business borrowers.
And that makes for me, that makes contacting someone like you 100% necessary and worth it, because it's a daunting task. And if I've never done it before, just gathering paperwork, gathering information, what are they going to, and not knowing what will be asked until I actually am being asked for it from the lender. That in and of itself, seems like the type of thing, I have this expression that most business deals die in the parking lot of the bank. And the truth is that folks either get turned down, or they get frustrated, or they don't put their paperwork together. They don't respond. They give up. It's just, it just becomes a headache to get it done. And it's good to know that there's a company like Guidant that can kind of create, frictionless process, for the lack of a better word. Okay, any last thoughts you'd like to leave us with, and then we'll ask you for some contact information. But any last thought?
Just I know we've talked about SBA loans a lot today, but just a quick reminder that earlier on I mentioned that we do really offer a variety of solutions. That goes for individuals that don't have the 20 to 30% down. That goes for individuals that don't really have assets or haven't really built out their credit yet. So please, when you are curious or when you'd like to be pre-qualified, please keep us in mind. Our goal is to always work out not just any option, but the better options. And if we have, if we lack an option at the time, we're always going to be able to give you that educational what to do next to get yourself in a position where you would be a great candidate for financing.
And that,
So, yeah.
yeah, that's great to know. There's more than one way to get it done, and that you have access and will guide your clients to all of those things. Beegees, this has been absolutely enlightening. This is always the biggest question. Everyone wants to go into business, but the question is, how do I get the money? And you've started to answer some of those questions, and I'm sure there are 100 other questions. So if any of our listeners wanted to get in touch with you to ask you those hundreds of questions, how do they do that? Is there an email address, a website? What's the best way?
Yeah, so our website is guidantfinancial.com. You will find my contact information in the Meet the Team Center or section of that website. But just while we're at it, the email address you could reach me at is Beegees. That's just like the band, .Hebert at guidantfinancial.com, or my direct line, which is 425-326-4600. That's
great. That's great. And again, for those of you listening, and you'll see we have all of that contact information in the bio below the podcast or the webcast. Beegees, I can't thank you enough. This has been absolutely great. Promise us you'll come back to talk more about funding a business. And I know you mentioned you're going to be at the IFA convention later on this month. I will be there. We will certainly match up. But again, thank you so much for being with us today.
Thank you for having me, Gary. I had a great time. It's been fun.
Thank you.